When a Wall Street giant like Bank of America makes a bold call, you pay attention. They've just reiterated their buy rating on Apple, urging investors to get in before the next earnings report on April 30th. This isn't a hunch, it's a strategic move based on deep analysis. BofA sees Apple as the ultimate edge AI play, ready to dominate the next tech frontier. With new chips and a wave of innovation, they believe Apple is set for a major rally. Let's break down why BofA is so bullish on this tech titan. BofA isn't just saying buy. They've slapped a $325 price target on Apple, up from $263. That's a projected upside of over 23% for a mega-cap stock. Their math: by 2027, Apple could earn $10.14 per share, and BofA applies a premium 32x multiple. They're forecasting Apple's revenue to smash through $500 billion by 2027. This isn't a company slowing down, it's a global powerhouse still expanding. BofA's aggressive target sets a new bar for Wall Street and signals investors to focus on Apple's long-term growth. Ignore the short-term noise. The big picture is all about innovation and dominance. That's the kind of conviction that helps you sleep at night. At the heart of Bank of America's bold outlook for Apple lies a revolutionary breakthrough: the all-new M5 chip, paired with Apple's cutting-edge on-device AI. This isn't just another processor, it's the engine that could redefine what our devices are capable of. And it's the foundation for Apple's next wave of innovation. Unlike traditional cloud-based AI, which relies on distant servers and internet connections, Apple's Edge AI runs directly on your iPhone, iPad, or Mac. This means your experience is not only lightning fast, but also deeply private and uniquely personal. Your data stays with you, and your device responds instantly. The M5 chip delivers a staggering 4 times the AI performance of its predecessor, opening the door to smarter digital assistants, more intuitive creative tools, and entirely new workflows. Imagine editing photos, composing music, or generating content with AI that feels like a true collaborator, faster and more responsive than ever before. With memory bandwidth up by 30%, and the M5 Max boasting an incredible 614 GB, professionals and creators now have access to industrial-strength power right at their fingertips. This leap in performance means smoother multitasking, faster rendering, and the ability to tackle complex projects that once required dedicated workstations. Such a dramatic improvement is expected to spark a massive upgrade cycle. As users everywhere rush to get their hands on the latest Apple devices, the excitement is palpable, with anticipation building for what these new capabilities will unlock. Apple's unique advantage comes from its total control over both hardware and software. This seamless integration ensures that every feature, every AI-powered experience, works flawlessly, delivering an unmatched user experience that competitors struggle to replicate. While other tech giants continue to focus on cloud-based solutions, Apple is building a fortress of privacy and performance directly on your device. This approach not only sets Apple apart, but also addresses growing concerns about data security and reliability. The M5 chip doesn't just raise the bar, it widens Apple's competitive moat, making it the cornerstone of Bank of America's bullish price target and reinforcing Apple's leadership in the tech industry. This is more than just an incremental upgrade. It's a transformative leap that will ripple across the entire Apple ecosystem, empowering users in ways we're only beginning to imagine. With the M5 chip, Apple is setting the pace for the next decade of technology, shaping the future and inspiring a new era of innovation for users and creators everywhere. Apple's Edge AI strategy is all about privacy, speed, and seamless integration. By processing data directly on your device, Apple ensures that your personal information never leaves your hands, giving you peace of mind in a world where digital privacy is more important than ever. With AI running on your device, your data stays with you. No cloud, no lag, just instant results. This means your photos, messages, and sensitive information are analyzed and enhanced right on your iPhone, without being sent to remote servers. The result? Lightning-fast performance and a level of security that's hard to match. This transforms the user experience and will spark a huge wave of upgrades. People are eager to get their hands on devices that offer smarter features, more responsive apps, and a seamless blend of hardware and software that only Apple can deliver. Developers now have the power to create apps that were once impossible. Real-time editing, smarter productivity, and immersive games. With on-device AI, they can build experiences that respond instantly to user input, opening up new creative possibilities and pushing the boundaries of what mobile apps can do. Apple isn't just adding features, it's building a platform for the next generation of innovation. By giving both users and developers these powerful tools, Apple is setting the stage for breakthroughs in health, education, entertainment, and beyond. On-device AI also slashes cloud costs, protecting Apple's legendary profit margins. By reducing reliance on expensive server infrastructure, Apple can invest more in research and development while keeping its business model strong and sustainable. It's a win for users and a win for Apple's bottom line. Customers enjoy better privacy and performance, while Apple strengthens its position as a leader in both technology and profitability. BofA sees this dual advantage as a key reason to be bullish. Investors recognize that Apple's unique approach to AI could drive long-term growth and keep the company ahead of its competitors. Apple's approach puts it firmly in the driver's seat for the AI revolution, shaping the future of technology and setting new standards for the entire industry. Apple's numbers back up the story. This is a cash machine. Year after year, Apple continues to deliver results that most companies can only dream of. Their financial performance isn't just impressive, it's a testament to their relentless innovation and operational excellence. For 4 straight quarters, Apple has crushed Wall Street's expectations on both earnings and revenue. Each time, analysts set the bar high, and Apple leaps right over it, surprising even the most optimistic investors. In Q1 2026, they beat earnings estimates by nearly 20 cents and revenue by over $5 billion. That's not just a small win, it's a massive outperformance that sends a clear message to the market. Apple's business engine is running stronger than ever. Apple's consistency builds investor confidence and sets it apart as a dynasty stock. Investors know they can count on Apple to deliver, quarter after quarter, making it a cornerstone in countless portfolios. Over the past year, Apple has outperformed the S&P 500, and BofA sees more upside ahead. This isn't just about beating the market, it's about setting the pace for the entire tech sector. For the next quarter, Apple is guiding for 13 to 16% revenue growth and elite gross margins near 49%. These are numbers that most companies can only aspire to, and Apple makes it look routine. Wall Street expects $1.95 per share on $109 billion in revenue. But Apple has a habit of beating the consensus. Time and again, they've shown that their guidance is conservative, and the actual results are even better. This is a company firing on all cylinders, with the financial firepower to invest and reward shareholders. Whether it's launching new products, expanding into new markets, or returning capital to investors, Apple has the resources to do it all. The fundamentals are rock solid. Apple's balance sheet is the envy of the industry, with cash reserves and profitability that provide stability in any market environment. Apple's financial strength is a key pillar of BofA's bullish call. With a track record like this, it's easy to see why so many investors and analysts remain confident in Apple's future. BofA isn't alone. Wall Street's biggest names are bullish on Apple. The average analyst target is $297, with Wedbush going as high as $350. Goldman Sachs, Morgan Stanley, BNP Paribas and UBS all see significant upside. This isn't a contrarian bet, it's a strong consensus among top analysts. The smart money is betting on Apple's continued dominance and growth. Broad support from institutional investors creates a powerful tailwind for the stock. BofA's $325 target is bold, but the chorus of bullish voices makes the case even stronger. Wall Street has spoken. Apple's future is bright. Even Apple isn't risk-free. The biggest threat? A weak iPhone upgrade cycle. If consumers don't care about on-device AI, sales could stall. The iPhone still drives Apple's profits, so any slowdown ripples across the company. Apple's high-margin services division faces regulatory threats and competition from AI-powered search engines. Antitrust lawsuits and changing App Store rules could cut into profits. Margins could also be squeezed by tariffs, supply chain issues, or a global slowdown. These risks are real and could impact the stock. Smart investors weigh both the upside and the potential pitfalls. Being aware of these headwinds is what separates disciplined investors from cheerleaders. After weighing the risks and rewards, BofA's thesis stands out. The shift to on-device AI is a fundamental change, and Apple is uniquely positioned to lead. The M5 chip unlocks a decade of growth, and the risks are manageable at current prices. Consumers upgrade for real benefits. Faster, smarter, more private devices will drive demand. Apple's ecosystem and loyal user base are too strong to ignore. Consistent earnings beats and strong guidance show management's confidence. The $325 target is grounded in tangible growth from the AI cycle. Apple's balance sheet, brand, and innovation create a home run opportunity. Ignore the noise. Focus on the fundamentals and the technology. This is a generational company at a pivotal moment. So, should you buy Apple now? The case is compelling. The M5 chip and on-device AI are set to drive a massive upgrade cycle and new platform for innovation. Apple's financials are rock solid, and Wall Street's consensus is overwhelmingly positive. Risks exist, but the potential reward outweighs them for long-term investors. Apple's brand loyalty and ecosystem provide resilience and a defensive moat. BofA's report suggests this is a prime moment to invest before the next growth phase. If you believe in innovation and AI, this could be your chance to take a bite of Apple.